Hello and welcome to the Keisha Podcast Talk Show. Good morning, good morning. This is Friday. This morning's podcast is going to be about the biggest investment you can make is in yourself. In my previous podcast, I went into that about the biggest investment that you would ever make is in yourself. I received so many responses in regards to that I decided to go ahead and talk more in depth about the topic. First, I want people to understand what is an investment. An investment is an asset or item occurred to generate income or gain appreciation. Again, what is an investment? An investment is an asset or item acquired to generate income or gain appreciation. What is appreciation? Appreciation is increased value of assets over time. What is appreciation? Appreciation is increased value of assets over time. I'm going to reiterate that the topic that we're talking about today is the biggest investment you can make is in yourself. What is an investment? An investment is an asset or item acquired to generate income or gain appreciation. Asset is a resource with economic value. Again, asset is a resource with economic value. What defined? Okay, well, let's say it's defined as an individual, corporation, country, own, or controls with the expectation that it will provide future benefits. Let me say that again. An asset is a resource with economic value, which is defined as an individual or a corporation, country, own, or controls with the expectation that it will provide future benefits. An asset can be thought of as something that in the future can generate cash flow. I'm going to repeat that. An asset can be thought of as something that in the future can generate cash flow. So, if you understand assets, then you also know that assets are classified as current, fixed, financial, and intangible. Again, if you understand assets, then you understand that they are classified as current, fixed, financial, and intangible. I wasn't going to go into the definitions as far as explaining that, because if you understand assets, then you're going to understand exactly what those four terms mean. But I may have people listening that do not understand anything going on in this topic, and that's okay. I would have to go into more details in that in another episode, so I'm gonna say that we're gonna have a part 2, and then that way I can go into the more in-depth into the assets as far as why they're classified as current, fixed, financial, or intangible. So as I continue, I want people to understand that an economic resource is something that has the ability to produce economic benefits by generating cash inflows or decreasing cash outflows. So, what is considered an asset? Okay, when you're looking at an asset, If you understand the definition, you'll typically find that it is something that provides a current, future, or potential economic benefit for an individual or a company. So if you understand economic resource, which is something that has the ability to produce economic benefits by generating cash inflows or decreasing cash outflows. So if you understand that, then you're going to understand what is considered an asset. Now, assets are broken down into like 4 different categories. So examples of an asset. So first you have your personal assets. Personal assets would be considered like your home, your land, your financial securities, artwork, gold. Those are things that are considered personal assets. Then you have what's defined as your business assets. And a business asset is considered like buildings, machinery, cash, equipment. Those things are considered business assets. But then you also have what's defined as non-physical assets. And a non-physical asset is non-physical or intangible assets which provide an economic benefit, but you can't physically touch that. So basically what that means is like your intellectual property, your trademarks, contractual obligations, royalties. All those are considered non-physical assets, which can be quite valuable. So if you're with me so far in this particular topic, then you're understanding assets. And you also are understanding that an asset can also represent assets that other individuals or firms do not have. So a right or other type of assets can be legally enforceable, which means economic resources can be used at a company's discretion, but it also can be limited by that person that owns it. Okay, so if you're not understanding what's the difference, then again, I'm going to have a part 2 to this particular topic, because I just can't go into it. When I decided to do this topic this morning, I didn't break it down into all of the categories to explain it. So if you have a current asset is something that's considered short term, okay, which can be converted into cash or consumed within 1 year. You know, your current assets include things like cash equivalents, inventory, various prepaid expenses. While cash is easy to value, you have to be able to understand what's uncollectible and how it's classified as impaired. Again, I apologize. I'm gonna have to discontinue this topic, but before I discontinue it, and I'm gonna move on to something else, because I might have to break it down into more. When I got the different inquiries about it, I basically was highlighting the main questions that people were asking me about. Because in the topic on yesterday, I was telling people that the biggest investment that they can ever make is in themselves. And in themselves, I was referring to you as an individual. And that's the truth. The biggest asset that you would ever make is in yourself. Regardless about everything else, you are your biggest asset. I would have to, when I go into the more in-depth of this particular topic, I will break that down more into for people to understand what I'm saying when it comes down to the difference in when you have current assets versus non-current assets. What's the difference? The liability when it comes down to the different types of assets versus liabilities. What is a fixed asset? What's considered current assets? So again, your current assets are things like I was just explaining. You know what? I'm going to pause this particular topic. And I'm going to just go back to the definition of an asset. What is an asset? An asset is an investment, is an asset or item acquired to generate income or gain appreciation. Okay? Everybody understand that. Appreciation is the increase in the value of an asset over time. It requires, like time, effort, and money for a greater payoff in the future. It's something that's going to generate profit. Do you understand profit? Do you understand capital asset? So you have your short-term, you have your long-term gains when it comes down to your assets. I want people to understand that an investment involves when you're using capital in the present to increase an asset's value over time. That's your bonds, that's your stock, that's your real estate, that's your alternative investment. When you decide that you want to invest, you got to think about not only the stock or the equities. I remember I talked about stock yesterday. I talked about Wall Street. I talked about currency. I talked about Beacon. I talked about all these things yesterday in yesterday's podcast, because I was trying to get people to understand the different type of investments that you can make. But I was also trying to get people to realize that the biggest investment, regardless with all that out there, all those different options, that the biggest investment that they can ever make is in what? Self. And I don't know, I can't say that, I can say that over and over and over and over, because the biggest investment is you. Think about it. You're the person that would have to do what? Make that investment into all these different things. If it wasn't for the person making the investment, or the person that's out there buying the stock, then none of these companies would wouldn't even benefit. When they start asking, well, what is the best investments? You got so many different types of investments, but you always want to invest in things where you're going to have the most, that has going to benefit you the most, where you're going to have the most gain. Okay? Where you're going to come out with the best, with the most. And most, when I say most, I mean financial benefits, the money. Okay? You got to think about, if you ever decide you want to start investing, you got to think about the benefits, how it's going to benefit your life. Is it something that you can keep up with? Is it something that you can continue to do? Growing up, I learned the importance of having CDs. So a CD is where you put your money in a CD, and it's basically sitting in the bank. I grew up learning about the importance of having CDs. Investing is a way to grow your money based on your risk, the tolerance and time horizon. High yield savings accounts and CDs offer ways to offset the effects of inflation. If you understand inflation, and once I say that, then I'm gonna end this topic. Inflation, when it comes to investment, is considered. Do you understand what the inflation calculator is? Okay. My apologies, everyone. I'm gonna say this. The rate of inflation represents how quickly investments lose their real value and how quickly prices increase over time. This is a quote And then it also says inflation also tells investors exactly how much of a return in percentage terms their investments need to make for them to maintain their standard of living. When you think about stocks and you think about the okay, do y'all understand the different types of stock? Do you understand what is an investment calculator? Okay. So we're gonna have a second part to this podcast. So I'm going to end that portion of the podcast here. I wanted people to understand that the biggest investment that they would ever make is what? In themselves. And it's true, because you want to always have something to fall on. Nobody don't know what tomorrow is going to bring. But if you already have, say you have property, and you own that property, then that's an investment, because that falls under the real estate. If you have CDs, so I tell people all the time, if you have money, on hand, and a lot of people don't trust banks, and I do understand that, but you can always put it in a CD. At least one or two, large CDs for a certain amount of money would be always beneficial. I'm going to leave you with this quote. And basically the quote is saying, the stock market is a device to transfer money from the impatient to the patient. Do you understand that? The biggest risk of all is not taking one. How many people understand what compound interest is? I'm Keisha, and you've just been listening to the Keisha Podcast Show.